As the world's biggest democracy gears up to deliver its political mandate, ETNOW brings you the much-promised opportunity to rise with India by getting you insights from the best and the biggest wealth compounders in the country. In fact, we at ETNOW conducted an exclusive survey among top CIOs and market experts through our ETNOW CIO Poll to try and understand how is it that they are positioning their portfolios right now. My colleague Anisha joins in with the findings of this particular survey. Anisha?
Oh, well, yes, the market is trading at record high levels ahead of the election verdict. And of course, don't forget that India VIX 2 is at almost a 2-year high, telling you that there's a bit of a nervousness around the election mandate. And that's pretty much expected given the kind of volatility that we have seen in the market. But we have made the life easier by trying to poll almost 30 big market veterans as to tell you how to maximize the return amidst this volatility. And these are the questions that we asked them. First up, this is a question which has been on everyone's mind, and we have been asking people whether election will mark the top of the year already for the markets. Well, it's a whopping majority coming in for no. More than 80% of the participants believe that it will not be the top for the market, and there's further leg to that rally. That gets me to the next question as to what's the best strategy then around elections. Should you deploy your money pre-verdict, maybe just book profits for the interim term, or deploy it post-verdict? A bit of a mixed picture coming in here. Yes, the majority still believes that you should deploy it pre-verdict already, with 52% participants believing that. But 37% also see the potential that if you have missed out on the rally, there's still potential to perhaps wait for it and deploy the money as and when the election verdict is out. Let's move on to the next question. And that's, of course, the fact what will be the government's priority post-election. Now, there's an overwhelming majority there. 80% believe that policy continuity is going to be top of agenda for the government. Yes, tax rationalization is something that the government has been talking about, and it's been a niggling worry for the markets as well. But for now, the worry seems to be limited, as only 11% participants expect that. The social spending expected to go up is a meager 4% expectation coming in. Moving on to the next one, and this is the big question that we keep asking everyone. Which are the sectors and you should be investing in? Well, here it's an interesting bit because of late we thought that FMCG and auto, which are the rural plays, might see a positive response, but the CIOs are not buying it yet. Very interesting, the fact that FMCG and auto is still at 0%, where they're willing to deploy more money is clearly what has been doing well. So the PSUs, infrastructure, defense, industrials, these are the segments which actually are top of the mind of all the CIOs as well right now. So 63% expect that. BFSI, IT, yes, there's some value available on the table. So 26% have started deploying there. Others had some interesting names, the likes of telecom, etc. as well. So we're watching out for some of those sectors as well. Let's move on and talk about the next question that we have polled the biggest market veterans on, and that's about what's the biggest monitorable for the market. Because we've been talking about how FII outflows have been quite rigid of late, but they're not worried about that clearly. Only 4% believe that the turn is something you should watch out for. Rate cuts in the global rate cut cycle is also not what of top of mind. What is clearly top of mind is still fundamentals. Earnings, they believe, is going to be the biggest driver, followed by the politics and policy, because that's been clearly aiding a lot of manufacturing and other segments. Moving on to the next one, what would be the best asset class for this year? Now, gold and silver have had a stellar, start to the year, and that's why I had put this question across, thinking that there might be part of the street that might be tempted to perhaps put some money as far as the special metals is concerned, but only 26% are tempted by that. 63% still believe that equities is going to be the best performing asset class during the year. Bitcoin and bonds that do not find much buyers right now. But then comes the big question. Where will you incrementally invest? Because of course large caps have been the place where people think the comfort is there. Mid caps is already at record high level. Small cap also posed a bit of a possibility and opportunity, but there also there's an interesting trend. Of course SME nobody is buying, so clearly the government's work there is working out, but small cap is seeing very little amount of buyers, and there's not an overwhelming majority still for the large caps because the mid cap universe is still very strong and the earnings there have been quite positive. So a bit of a tug of war between large cap and mid cap there. Moving on to the next one then, what's the fund cash level currently? Well, the large part of the street is still sitting on minimum amount of cash. That's around just 3 to 4%. Some of them do have cash levels higher than 7% also, keeping the powder dry perhaps, but the large part seems to be in the consensus zone of 3 to 4%. Then over the medium and long term, what should be the return expectation from the Nifty? So from this election to the next election, what kind of growth rates we should expect from Nifty and the returns there? There also there's a bit of a tug of war. So largely within the historic range of 10 to 15%, while 10 to 13% is the maximum number of participants I believe will be 10 to 13% kind of return, but 13 to 15% can't be ruled out, and some interesting results coming in on higher than 15 also. Though of course if you look at the long-term average, we've largely been between 10 to 15%. Some outliers there expecting less than 10% return as well. The last few questions that we have for you also are around elections itself, and of course this was the biggest one that we were talking about in terms of the CAGR return of the Nifty. So there clearly we have the verdict between 10 to 15%, but very interesting analysis coming out how they're not looking at FMCG auto as yet. Clearly they are saying that it's not the top yet, there's a lot more to go as far as this market mood is concerned, and perhaps if you have missed out on the rally as yet, there's still an opportunity that might come for you post the verdict of the election mandate, and that is when you can deploy more funds. Back to you guys.
Right, thanks very much for that. Very relevant questions, and an amazing set of market participants have also participated in that. Of course, we'll be showing you all the names.
If you like this video, then like, share and subscribe to ET Now.